Hey there, good morning. I'm Connie Foote with Foote Title Group, coming to you live with Coffee with Connie to talk to you about a lot of different things that come up about real estate. So I hope you guys are having a great day. I really try to come to you a couple times a week with either things that we see happening in the real estate market or things that are happening at closings or through the closing process, or sometimes maybe questions or concerns that people come to us with about real estate or closings or the process or how all of that happens. So I've been a title agent for more than 30 years, own my own title agency, and I don't know everything about real estate, but I've been doing this for a long time, so I have a lot of experiences. And so if I don't have the answer to a question that you have, I have a lot of good real estate professionals that we work with that I like to reach out and ask those questions and get your information answered for you. Hey there, Angela. How are you this morning? Thanks so much for tuning in. And let me say, if you're tuning in either live or on a replay, check in and say hi. Let me know that you're on because it does help us tailor the message to those who listen and maybe have some questions. If you find what we're talking about valuable, please hit the share button too, because it helps me share this information with people that you know. So a lot of times when I talk about stuff, I try to qualify by saying, you may be somebody who is buying or selling something outside of the Maryland, D.C., Virginia district area, and that whether the information we're talking about is specific to those areas or specific around the country. This particular topic is something that is definitely a hot topic across the country. So I want to jump right in, and thanks again so much for tuning in. Hey there, Karen Renner, how are you this morning? So when you're doing a closing, this comment actually came up recently with a young person that we're doing a closing for, who we were talking about closing costs and how those closing costs are determined and why they're so expensive and what's the pieces that go into that. So one of the comments was specifically about taxes and insurance. So getting a new insurance policy, because the lender requires you maintain homeowners insurance on the property that you're purchasing, it's really important to have that insurance to protect yourself. If there's a weather-related issue that happens to the home, you want to make sure that you have coverage in case something happens. But also if you happen to have a fire or something else happens, maybe a tree falls on the side of the house, or you have an electrical issue that causes a lot of damage in your house. There's a lot of different things that can happen, so you want to make sure you have that homeowner's insurance. But the lender also requires you maintain homeowner's insurance, and the reason for that is because they're loaning you a huge amount of money, and they want to make sure that money is always secure for as long as you owe them that money, so they can always make sure they can get that money repaid. So whether it's you making the payments or if something happens to that house and it's destroyed, then they can recuperate that loan amount that they've extended to you. Hey there, Nancy. How are you this morning, girl? Thanks for tuning in. So when we talk about this and you're getting ready to go to closing, the lender's going to say to you, I need to get some information about the homeowner's insurance that you've gotten. So they want to know how much the policy is per year, and they want to see the policy to make sure, one, they're covered, and two, that they're listed as a loss payee. But also, two, they want to make sure that the amount of insurance coverage that you're getting will actually cover them if something happens catastrophic that would cause a problem with the home. So they are going to want to look at a copy of that policy. But so let's talk about the costs and the expenses and how it affects things monthly as you make your mortgage payment. So when they ask you to get that homeowner's policy, they ask you for a copy of it. Part of the reason they're doing that is they need to calculate what portion of your mortgage payment is going to include making sure that homeowner's insurance is paid. So good morning, Sherry. How are you? Hey, Phil. How are you today? Thanks for tuning in, guys. So when they look at your homeowner's insurance policy total amount, they're going to expect you to pay that first year up front before closing. And the reason for that is because each month they're going to actually collect 1/12 of that bill in your monthly mortgage payment. And so that is so that they can actually pay that bill at the end of the first 12 months when that insurance bill comes due again. Because if they don't collect that money from you, they can't pay that bill and make sure it's paid. And the reason the lender wants to collect it and make sure it's paid is because they want to make sure that that insurance is always taken care of. Again, because if something catastrophic happens, their mortgage is not secure unless that house is standing and you're making the mortgage payments on it. So one of the many ways that it could affect that mortgage and the mortgage company getting repaid, so they want to make sure that they're taken care of. So we have a question. Sometimes it's a little hard for me to read these. You're buying a house and found some termite damage. This is Joe, by the way. Hey, Joe. So we get further inspection for termites. So unfortunately, because of the light, it's a little bit harder for me to read the smaller print. But what I think you're asking me is about you're buying a new home and the termite inspection was done and it showed that there's termite damage on the house. So termite damage is something that is not covered under your homeowner's insurance policy. And so if an inspection is done and termite damage is found, typically, and it depends on how your contract is worded, but typically that termite damage should be addressed in that boilerplate of that contract that talks about who's responsible if termites are found when the inspection is done. And typically, in most cases, unless there was a change to your contract, and typically in most cases, the seller would be responsible for taking care of that damage before your closing and getting the termites exterminated and getting that damage taken care of. And hopefully that answered your question, Joe. As I said, sometimes with the light on, it's a little bit hard for me to read the small print in the question. So I'll definitely go back and look, but if you could let me know that that did answer your question, or if not, let me know a little bit more detail about what you might need me to address for you. But that is not covered by homeowner's insurance. So that is something that you need to address before closing with that seller. Hey, Tony, how are you this morning? Hey, Sherman, nice to see you tune in. Thanks so much, guys. So let's go back to this homeowner's insurance for a second. And Joe, if I didn't answer your question, pop back in and let me know. Or if I did, pop back in and let me know. And if you guys have questions, ask as we go along or ask after we're done, because I love getting the questions because that helps me know what you're thinking and maybe answer some questions for you. So you're welcome. Thank you so much for asking. So let's talk about the homeowner's insurance still. So when you get ready to go to closing, the lender's going to ask you to get that policy and they're going to require you to pay for the first year up front, because that'll cover the whole first year of you owning the home and paying on the mortgage. And as I said, they're going to calculate what 1/12 of that bill is, so that 1/12 of that bill is collected in your monthly mortgage payment. So at the end of 12 months, they can actually pay the bill and ensure going forward that your mortgage payment includes the insurance and that their mortgage is secure by making sure your insurance is covered. The lender collects insurance because they want to make sure that you don't run across hard times and say, well, I just won't pay my insurance this month. And then when your insurance lapses and there's a catastrophic problem, or maybe even not catastrophic, maybe it's just pretty large, significant problem, then they potentially have a problem with the mortgage, and so do you, because now you have a huge damage problem in your house and you maybe can't afford to take care of it, and the insurance doesn't exist. Now the lender has a less secure mortgage because maybe, let's say there was $50,000 worth of damage on your house and your house is worth $200,000. If you stop making the mortgage payment, the lender doesn't have those funds to repair that $50,000 worth of damage. So they've loaned you that money based on the value of that home at the time that you borrowed the money and that you went to closing. And so they want to make sure that that loan is secure for as long as you still owe them the money. So they're going to require you pay that up front, that full policy for 1 year, and then every single month they're going to collect 1/12 of that bill so they can pay it at the end of each year. So they're going to collect at closing. You may pay that insurance policy up front before you go to closing, or you may pay it at closing and the closing company will actually pay the bill to the insurance company. And then the lender's going to collect a couple of months to make sure that they have enough in there to pay the bill when it comes due, because of the payment sequence. So they may collect 2 months of insurance at that point. Now let's talk about taxes, because taxes is the other thing that they're going to do. They're going to require that the taxes, the property taxes, are paid up front for at least whatever period might be due. And then they're going to collect a certain amount based on what that due date is of those property taxes. Because again, as we've talked about before, property taxes are a first lien on a property, which means that they all have to be paid before anything else. Because if they're not paid, the county tax assessor can actually sell that property at a tax sale with no regard to you or the mortgage company. So the mortgage company, again, is going to make sure that the taxes are current at the time of closing, and then they're going to collect enough, because unlike your insurance, it may not be due right now. So they're going to collect enough to make sure that when that bill comes due from closing and adding to it in your monthly mortgage payment, that they have enough to pay it. So they're going to collect some at closing and to put into your savings or escrow account, and then they're going to collect 1/12 of that bill from you each month also in your mortgage payment to make sure that's paid. So you may hear the words escrow. Escrow is a savings account that is legally protected, that the lender can not do anything else with except for pay those taxes and the insurance in the amounts that they tell you are due and that they're going to be collecting. So basically it's a very protected savings account. So they'll collect money at closing, and then they'll collect from you each month to make sure that at the time those bills come due, they have the money to actually pay those bills. So with taxes, the timing is a little bit different, and whoever does your closing can explain that to you in detail how they came up with those numbers. Because the lender, let's say if your taxes come due next month, and they're all paid up for now, and you're going to closing right now, let's say today, then the lender may collect at closing 6 months of property taxes to make sure that when that bill comes due next month, there's enough in there to pay that tax bill, because they're not going to have collected any mortgage payments from you to be able to pay that bill directly at that time. And then they'll start collecting through your mortgage payment and saving it to pay the bill when it comes due again next time. So it just, that part totally depends on when your bill comes due. And as I said, whoever does your closing can explain that part to you. And it may seem a little confusing because you have all of these payments. You're paying insurance up front, and then you've got to pay insurance a little bit to go into your escrow or savings account, and then you've got to pay it monthly through your mortgage payment. Well, gosh, it looks like you're paying all of this insurance up front. Well, what it's doing is setting up that those bills to make sure that they're paid when they come due, and whoever does your mortgage and whoever does your closing, either or both, should be able to explain how those numbers are arrived at when you get ready to do your closing. And so that sounds like a little bit of confusion, but just to try to break it down for you so you do understand that the lender is doing that to protect their mortgage. There's an awful lot of money on the table there that they're loaning you to buy this house that you fell in love with, and so they need to make sure that they'll get that money back. And so in order to do that, there's a lot of different factors that could affect that repayment, and these are two of those that they require at closing in order to make sure that those things are taken care of. So I love talking to you guys. I really appreciate the question, Joe. Thanks so much. And thank you guys all so much for tuning in. Again, if you found what we talked about valuable, hit the share button, please. I would really appreciate that. Helps me a lot. Share the goodness that maybe people that you know don't understand. And if you have questions, always feel free to reach out to me both through the comments here, or if you want to reach out to me individually, Connie at foottetitlegroup.com. Or you can reach out through our website. You can reach out to me personally through the email. You can personal message me through Facebook. I love talking to you guys, and I really like trying to be able to give you information that's helpful. So hope you guys have a fantastic day. I'm Connie Foote with Foote Title Group, where we protect your home ownership. Thanks for tuning in to Coffee with Connie, and I'll talk to you soon. Bye.